Good morning, everybody. Welcome back to the Schwab YouTube coaching channel. It's our Wednesday edition of Trader Talk in today's market. I'm your host, Kevin Horner. I'm joining from Denver, Colorado. Today, I am pleased to be joined by my friend and fellow Schwab coach, Ben Watson, who is joining us from Florida. Good morning, Ben. How you doing, sir?
Good morning, Kevin. I'm joining from in the shadow of what I consider to be the Holy Land, Disney World here in Orlando, Florida. So welcome to all of you. It's good to be here.
Well, we're glad to have you, Ben, obviously. We also are pleased. We've got Barb Armstrong in the chat, everybody. You can say hey to Barb. She's going to manage questions and comments that Ben and I are unable to get to. But as you know, we want to hear from you. We'll keep an eye on the chat there and try to bring your comments and questions into our discussion. Feel free to post for the duration of the show. We're going to cover some important disclosures before we get into things, but I do want to remind you, make sure you're following us on X, Kevin Horner CS, Ben Watson CS, and Barb Armstrong CS. And of course, we would really appreciate it. Make sure that you're subscribed to the Schwab YouTube coaching channel here, everybody. Let's hit those disclosures and we'll get right into the charts with you all. Remember that our conversation here is exclusively informational and educational. We do not make recommendations. We do not endorse a specific approach to trading the market. We do discuss technical analysis, however. In this class in particular, we want to remind you that technical analysis is merely a piece of your decision-making puzzle. We do not encourage you to make decisions on any one single item, but notably, as it relates to technical analysis, consider this just part of that process rather than the sole means of your research. As far as our agenda is concerned, it's going to be pretty consistent, everybody. If you've been here before, you know how we do things. We work through the major indices. We'll start with the S&P 500. We'll look at the NASDAQ 100. We'll also look at the Russell 2000, and then some tertiary groups, some semiconductors, perhaps some sectors that are moving this morning, try and get a feel for how things are looking ahead of today's FOMC decision, which I think we all agree, Ben, is probably not much of a decision according to the expectations and the modeling, is it? Not much ambiguity on what we're anticipating today from the Fed.
No, but you know what they say, Kevin? No one expects the Spanish Inquisition. So, you could have something come out of left field. Probably not, but
sure,
just saying.
It's a possibility. So we want to discuss it. Probably not going to see a whole lot of direct market action here, Ben. I think a lot of traders might anticipate a little bit of a weak or quiet opening rather than weak, I should say. Looks like we've started flat, about as flat as we can be, Ben. We are at up 0.01%. The last 2 weeks have really just been consolidation in nature is what it seems like here. Reminder that everybody, yes, we can go upward, and then we can retreat with drawdowns of 2, 3, 5, 10%, but we can also just kind of move sideways, Ben, and gain a little consolidation through that action rather than price action, can't we?
Yeah, for sure. And Kev, I think there's some timing and there's some location issues here, right? I mean, one, this FOMC meeting today, the press conference and all of that information comes out, so that creates kind of a wait and see mode going into it anyway, number one. Number two, it's summertime, right? And summertime tends to be slower just because traders are human and they go on vacation too. Number three, this FOMC meeting backs up against tomorrow, Juneteenth, which is a market holiday. And so you've got a holiday shortened week. That market holiday comes on a Thursday this time. So a Thursday holiday for the market tends to lead to taking Friday off, which tends to lead to a long weekend, which tends to lead to an even shorter holiday week, which tends to lead to not a whole lot going on.
Mm-hmm. And it's easy to be lulled to sleep a little bit. And the reminder, I think, that's important, Ben, at least as it relates to trying to trade the market in these shorter windows of time when we anticipate lighter volume, perhaps, that becomes tricky, doesn't it? Because lighter volume doesn't mean easier market by any stretch.
No, for sure. There was an old saying, never sell a dull market, right? Because that simply means there's a lot of different ways to express it. It just simply means that there is a possibility for volatility that is brought about by volatility vacuums, if you will. right? Or volume vacuum. So you could see price move quickly in thin markets and on individual names and on indexes in general. Now, maybe the best thing that we could say in this particular case is the fact that we're bumping up in the S&P 500 up against that resistance right around that 6,000 mark, which from a psychological standpoint is a big psychological resistance. It's been resistance before. And underneath it, underpinning us 200 points below us, is the stability relatively, and I'm making air quotes, of that 200 period simple moving average. So it's kind of stuck in the middle here.
Yeah, and that's another good reminder, of course, Ben, when we go sideways like this, it's important to know the levels that might matter most, not just to the market, but to us individually. Where will you look to take action? Or as Ben likes to say, the if-then statement of your approach to trading becomes so imperative at the levels that matter. For a lot of traders, Ben, those levels as it relates to the S&P here, take us back to the gap move we made on May 12, where we really cleared all of this overhanging resistance and created a new layer of support. And so that 5,800 ledge, coincident with the 200-day moving average, which is at 58.12, really provides an approximation of longer range support. But Ben, we don't even have to be there. We don't even have to visit the 50-day. In reality, as we've maintained the 20-day, if we hold it today, sir, it's going to be 8 straight weeks of maintaining the 20-day. 40 days start with today's action if we maintain it. So there's not a lot of action to take here if we don't sell below the 20-day, is there?
Sure, not at all. And well, I mean, you can do a lot of things, but you're right. I mean, that would be a break, at least initially, and might be the warning for some traders who are looking at saying, hey, there's geopolitical risk out there. There is, there's monetary policy risk. There's tariff policy risk. So if this starts to show cracks below that 20, maybe start to peel some off. Kevin, if you were to draw a horizontal line off of the low yesterday, kind of right around that 59.70 mark or so.
Yeah, I could do that.
And if you drop back over to the left, it does. Yeah. Even if you go back to the left, if you look at that February, March high, kind of into the end of February, first part of March, it's pretty consistent with that level as well. So, we're kind of at a level of what was previous resistance on the May rally. It's now acting as a support level. This is a point where you could see, again, of the possibility of a bounce. And if that's the case, then we could see that be the next leg higher if some of this uncertainty leaves the market and we see some directional push. Yeah. But there is one other thing, though, Kev, and that's if you take a look at the RSI in the last couple of days. I mean, it has, even though we made equal highs in the last 2 or 3 days, that RSI has been making slightly lower highs, which again suggests, there's an overall inherent bullish bias to the market. So this would suggest perhaps nothing more than a pause. It's not a nefarious possibility or harbinger of a downtrend. Maybe just a pause here at this point.
Yeah, I think that's a good reminder, Ben. I know traders, we get a little bit too black and white as it relates to some of these external factors. And we look at an RSI divergence and say, well, clearly that means a reversal is impending. Yeah. And that's really not the case, right? We did make a lower high at the last high in price relative to the RSI. So some would say that means a pause is imminent. And guess what? We've done that. We've really gone sideways for the better part of the last 2 weeks. And we could be also working off that bearishness, that brief bearishness, just through time passing. So the other thing is you noted the bearish nature, but Ben, I put in a support line there. And I think it's notable that the support of the RSI along the way, it's not gotten under 53 as we've continued to push higher. That's also bullish behavior relative to what the RSI can tell us.
For sure. It is. I mean, holding that level of support, again, and it speaks to this issue, right? We look for these divergences. I'm much more from a technical analysis perspective, not just my opinion, but as a technical analyst, I'm much more willing to buy into the idea of a bullish reversal off of a downward trending stock with an upward trending RSI than I am the reverse of that, right? And
Sure.
again, because what that's doing is that's telling me that counter trend move, again, because of that inherent bullish bias, that counter trend move may be ending, and it doesn't necessarily end quickly. Buyers step in and nibble and then wait and buy a little bit more and then buy a little bit more as the price starts to move higher. And so a bullish divergence perhaps has more significance than a bearish divergence in this case. We've talked about that, I think, before in this class
I
as
think
well.
we have. Ben, I was going to put a pin in it and come back to it, but I think that would be doing our viewers a disservice. Why don't we just take a look at one position that's actually in the news today that validates that viewpoint? I spoke about it earlier today, as it turns out. Intel has noted they're going to go through a workforce reduction, which is a benefit to the bottom line. But Ben, what I was noting on Intel, when you look at this on a weekly chart, I've got a lot of lines drawn in, but look at what's going on. Let me add back my RSI here, and I think you'll see what I'm referring to in the RSI notably here, because when you take a peek at, I'm going to adjust that so that it stands out for us all. Here we go. Okay. Look at what the RSI is doing now. And I zoom in, while we have been going sideways in Intel, sandwiched between 19 and 25, look at the RSI down here, making a series of higher lows along the way. That tells us something about the ledge that we've tested a number of times in the last year here, Ben, doesn't it?
Absolutely. In the immortal words of Richard Dreyfuss in the classic movie Close Encounters of the Third Kind, this is significant. This means something. And it does. It simply means that, well, if we look at what the RSI tells us, the RSI is telling us where price is closing relative to the highs and the lows of the candle or of the range. And so what we're seeing is prices closing closer to those highs over a period of time that aren't pushing price necessarily higher, but they're pushing the range and the momentum or the sentiment within that range higher. And so that's what you're starting to see here is buyers stepping in, and they did it across 1, 2, 3, 4 quarters and potentially looking for a catalyst. And maybe the catalyst is this, RAF notice that, labor force is changing, but they're doing it as a means to cut expenses and to position themselves for bigger and better things, right?
Yeah, potentially. And I think, one, it's great to have a news piece, Ben, but when you look at something that gives you a multitude of additional content, like the RSI divergence that you have at these lows, the massive amount of volume over the last 9 to 12 months here, that tells us something as well. The spikes in volume at this very low range, mind you, which is very low. Let me put this on. This is a 10-year. Let me see if I can back that up. Nope, I'm going to have to go a little further here, everybody. We're going to go to 15, and then you'll see if I extended these levels, I mean, these all carry some semblance of weight, Ben, as we go back in time. So it's pretty clear that $19 18 to 19 has been providing support. But what's unclear is whether we have a new trend developing. But Ben, when you look at the volume here for the last 9 to 12 months, look at how substantial that is relative to every bit of volume in the last 8-10 years. This is pretty instructive volume, isn't it?
Absolutely. So think about this. That there's maybe a little bit more material structure to that $20 level than perhaps we might think. So think about institutional investors primarily that might be looking for short positions, right? Because this has been a stock that really since, over the course of the last couple of years has been in a downtrend, right? And in some cases, a pretty significant downtrend. So if you're an institution or a hedge fund or a mutual fund or something like that that's looking to create short positions, primarily in this case, hedge funds or institutions, why would you look at shorting something that's at $20 and has the ability or a very low probability of going to zero? So you don't have much room to play with there. Wouldn't you, as an institution or a hedge fund looking for short positions, look for something that's been beat up that has that opportunity to move significantly lower over a period of time, as opposed to trying to pick up an additional, I don't know, what are they going to get? Another $10 before the company gets delisted, right? I mean, that's the thought process, right? So it might not be a significant short opportunity for those institutions. Therefore, there's not a lot of short pressure at this support level, meaning if it breaks 20, how far down can it go? Now, obviously, it can go to zero, right? There is that risk to that.
Right.
But the likelihood of this having significant short pressure here is less than a company that was sitting at, say, $60 or $100 a share, breaking a support level.
Yep. And as we all know, we're not bringing this to the table as a recommendation. I just found that what an excellent display of the points you were making, Ben, as it relates to the RSI specifically. This one is really interesting today for the headline and the pattern development, along with volume and RSI. All of that seems to speak. So I just found that to be pretty intriguing today. Let's kick back to our standard review. Let's check out what's happening in the NASDAQ. As we discussed, Ben, a lot of quiet action here still this morning, kind of a flat day in the NASDAQ, but holding and maintaining that 20-day SMA once more.
Yeah, absolutely. So, my son and I were driving up the coast from Miami to Orlando on Monday, and we were listening to Jimmy Buffett's Fruitcakes album, and he's got a great song on there called Quietly Making Noise. And I think this is a great example of that, right? So NASDAQ has been technology, it's been technology leadership, but the fact that you're starting to see kind of this quiet movement, we're starting to see a little bit of bleeding back in there. This is a kind of that, I think in Jimmy Buffett lyrics, right? All the time.
Oh, it's
everybody else has been in a workshop. This is an index that's quietly making noise. It's quietly coming back into that leadership role as investors pivot back towards some of those technology leaderships, as we see the AI revolution and all of those moves starting to come back. And this is going to be theoretically the epicenter of that, right?
Yeah, absolutely. I'm noting the ledge once more. I've got a couple of ovals at what was resistance, and I'm going to have to lift those because it seems like those are, if we get what bulls are hoping for, I should say, not we, but bulls are looking to maintain the nicely gentle sloping upward 200-day moving average. But Ben, we should also point out, we've got that 50-day in purple rising rather quickly due to the action of the last 8 weeks here. And we're about to get
that would be a golden cross.
Golden cross on deck, Ben. Look, at this point, we would have to, I don't know there's any way we won't get the golden cross the way the price action is right now, right? Given the number of days that we've been above the 20-day now and the strength of our bounce back, it sure looks like that's almost bound to happen at some point here in the next 3 to 5 sessions.
But like I said, Kev, nobody expects the Spanish Inquisition, and so something could happen, right?
Of course. Something could happen, and as we could absolutely get smoked here, Ben, if we took out the 20-day moving average. We could very quickly find ourselves at this confluence of horizontal support, the 200 and the 50-day moving averages there. The good thing is, there's a ton of support at that level. There's a number of traders over various windows of time and various influences watching that zone, aren't they?
Absolutely. And again, this has been the epicenter of that kind of tech leadership and seeing that drive to the upside. And if there's a return to that, this is where it's going to come home to roost, right? You're going to see it theoretically. Again, not a recommendation, simply an illustration of that. And that's where you look at some of those individual names. So, right, Intel sits within this space. And so if Intel breaks out, like we just looked at, through some of those resistance levels, then you're going to likely see some strong upward movement here in the NASDAQ. If we start to see rotation into, you've got some of the other AI space names. I think the words of the summer aren't going to be necessarily the Mag 7. I think you're going to see some other new acronym come in as you start to see some of those AI stocks move into some of those leadership roles, perhaps in the place of what was one of the Mag 7 that then got taken out when it became the Mag 6 and something like a Tesla, for instance.
Sure. Okay. You know what, Ben? We've actually seen some really good movement from a relative strength performance side of things out of the small caps lately here.
Yeah.
And what's interesting about this is one thing is the trend, obviously. We've seen a shift in trend. You can see my downtrend line in white You can see us holding the 20-day moving average over the last 4 sessions. We've tested it 3 of the last 4. But Ben, in order for the small caps to be providing some leadership, some would suggest that the conversation around a potential recession has to move to the sidelines if that's going to be the case. There hasn't been a whole lot more discussion of late as it relates to the potential for a recession. The Russell holding up quite well here. It looks like a breakthrough resistance, a throwback to former resistance, now potential support. I mean, this is looking still bullish, Ben.
I was trying to remember, just when you mentioned that, the last time I heard or saw, social media posts about the R word, right? That recessionary risk. And again, I think that's one of the reasons why people watch and listen to and parse the Fed statement so carefully. They're trying to kind of, garner whatever or infer whatever from that discussion. And they'll look at those words and say, well, this is, increasing that R word recessionary potential by a certain amount, right? But, I think that's where, once again, technology leadership kind of has that power, if you will, always has, always will have that potential power to drive that conversation beyond the recessionary words, right?
Yes,
I think we've digested tariff information at this point. Now we're looking back to technology for the sake of driving leadership. And if you remember, so we're just a few days away now from the rebalancing again of the Russell 2000. They do it every June in terms of that composition. Last year, the rebalancing was out of some of the financials in the small cap space and into technology. So to the tune of about 20%, the small caps, the Russell 2000, led by technology. That was reflective of the demand. So it's going to be interesting to see what I know that they've pre-published the potential list of the rebalancing. I honestly haven't looked at it recently just because of things that have been going on. But it'll be interesting to see what that recomposition of the Russell 2000 then leads to in terms of leadership. Is it still, and maybe it is even more technology leadership, and therefore this becomes more like an interest rate sensitive NASDAQ, if you will.
So, Ben, when you think of the Russell, we should always consider the components that make up the space, of course.
100%.
What group do you feel is the largest allocation-wise within small caps? Isn't it basically financials and healthcare that seem to lead those two? It's not as heavy in tech, right?
It's not, but it has been shifting that way. Like I said, with the June 28th last year rebound or reconstitution, that weighting in the index became about 20% technology, which is up from about 14% previous to that. So it seems to be jumping a little bit. So the question is, will that reconstitution stay with that technology leadership? My guess, and like I said, I haven't looked at the pre-published, this is the expected reconstitution, but my thought might very well be, because there is a re-emphasis on CapEx spend in the manufacturing space, and a lot of that kind of obscure, manufacturing technology and equipment industry exists specifically in the industrial sector, exists within the small cap space. My thought is we may see more of a rotation back into industrials in the small caps, perhaps away from even more so financials, because financials has kind of been not really the leadership space, even here in the small caps.
I did just pull it up, actually, Ben, and I'm just going to mention the top holdings relative to the small caps, approximately, led by financials. Secondary are industrials. Third place on the group would be healthcare, and then fourth would be still technology. But that tells us something, because, again, those first three, Ben, aren't, being that they're not tech, they're not communications, they're not discretionary. It tells us something about the leadership components, I think. And maybe the reminder being that once we break down trends, things can shift a little bit. I think it's notable when you look at those main three big boys here: financials, leadership, Now, granted, at the upper portion of the financial range here, of course, we've banged our heads on this ceiling a couple of times. If we looked at industrials have been providing some overall longer range leadership. We are below the 20-day. We're getting a little bit of a breather, but just that it looks like at this point. We'll remain, diligent on that. But healthcare has also made a significant move. But Ben, the last 3 days, they've really been rejected. I'll tell you what, this looked like we were getting back in gear here when we cleared the 50-day moving average. Boy, we've just been thrown back into oblivion here, back below the 20-day. But looked good 3 to 4 days ago, late last week. Doesn't look good here anymore, does it?
Down is a move too, Kevin. Not just
Thanks for the reminder, Ben. That's true.
Oh man, yeah, for sure. And I think you look at this from that space. See, that's where again people wonder. Well, wait a second. Why has the small cap space, even in the face of rates selling off a little bit and circumstances that might, you have a couple of factors fitting into this. One is the fact that healthcare has been lagging, so have financials. Industrials perhaps have been the better performing of that space, and then coming on behind that now as we kind of rotate back into the technology space. So maybe that's the reason why the small caps are going sideways at the moment.
Yeah, maybe why we haven't busted higher, right?
Sure.
You're going to need to see bulls defend healthcare at this level. Otherwise, we're looking at a continuation of the downtrend. So bulls are going to have to step in if they want to carry the healthcare space. Last thing here, let's jump back to the SOX. I know we had some requests to hit it, and we always do. Semis are a big part of our daily review here on Trader Talk. And Ben, we are pushing back into a very important level here on the semi. The Philly index, at least the SOX, right around 5,400. We've been pushed back a few times from that level, haven't we?
Let's see, once, twice, 3, 4, 5, 6, 7. If you draw it with a big wide paintbrush, you can go all the way back. It was support last June and July. It then became resistance multiple times throughout the last year, and now we're approaching that again. 50 periods kind of accelerating to the upside, 200s going flat, and we're running into resistance. That is the composition for it. That is if you want to think about it from this perspective, that is the perfect storm of sideways summer movement, right?
Yeah, it sure looks like it, doesn't it? And again, the tests along the way at the 20 have been your opportunity. The thing that stands out for me on this chart, Ben, is that the 20-day and our current price are quite disparate. Whereas in the SPX and in the NDX and in the Russell, they're all sitting on it. SOX is providing us with some leadership here once more. The question is, can it continue to do so? Can we clear 5,400 on this indice with conviction and just continue to break out?
Yeah, absolutely. So I'm just looking at the heat map here, Kev, for the semiconductor space, and it's not NVIDIA that's leading the way. It's Broadcom to a certain extent, but it's also ADI, Analog Devices, for instance. Mm-hmm. And then you get into Microchip and Empower, both of which are AI, power space, power processing, and then holy cow, First Solar rotating back in, up 1.81% today in this move. Wow, interesting.
That's got to have something to do with its aggressive move to the downside yesterday, I would think.
A little bit of a bounce back, yes.
I would think, yeah. The other interesting thing, maybe we do the same imagery, but with the Russell instead. Yeah. We keep opening tech and go into semis and small caps. Hey, there's a few red ones in here, but there's also quite a few green ones from the small cap side of things as well.
MicroStrategy. I think, referring to themselves as strategy now, not MicroStrategy, to, stay out of the micro, kind of, making sure that people recognize that they're not just micro. In that sense, but they're more software and that processing. But in the semiconductor space, yeah, you do have some MaxLinear that is moving up, Semtech, Credo Technology, onto innovation. All of those seeing some strength here this morning as they move higher, but you've also got some others. Silicon Labs, Slab down a little bit, Vico down a little bit, ACMR down again. So, and this is a great way. I mean, I think Kevin kind of stepping out in meta a little bit. This heat map and Adventure Golfer, a great username, Adventure Golfer. Golfing is always an adventure, especially in Florida, right? Because there's alligators in every body of water. So when you face down death with a 9-iron, I think that becomes an adventure. But look, you can use the heat map. If you go to the Market Watch tab and you go to the heat map to visualize and then the heat map, you've got all those choices on the left-hand side, and you can look at any specific segment of the market that you want to, or any watch list that you have, or any of the pre-built watch lists. You can pop them into this heat map view.
Yeah, I think the reminder here is simply that whether you like to look at data in the form of like an Excel spreadsheet, which you can easily get through the quote functionality, right?
Right.
Or if you want to see it in the visual terms, that's the biggest difference here as it relates to the heat map and the quotes, for example. You can definitely get more detail when we look at quotes because you get to define what it's showing you, right? You get to define all your column details. But the notable thing as it relates to the heat map is the size of the box tells you the market, is essentially telling you the market cap. So the size of the box as the stock grows in market value will also grow. So if CRDO continues its upward trajectory, for example, it's up almost 5% today, then its market cap will grow, and thus the box will take over greater importance for the space, right? Because as a cap-weighted view of things, Ben, that tells us that we're getting leadership from one of the larger groups within that industry group.
Right. Ricebird reminding me to use a wedge on the Gators because, nobody can hit a 9-iron properly, right? So.
Well, I thought that's why we have the 1-iron, Ben. Even God can't hit a 1-iron,
exactly.
right? That's why we have that in our bag.
Exactly. Not even God can hit a 1-iron, right, Kev?
That's the rumor.
That's the old joke.
That's the old joke. And that should define exactly a couple of old gentlemen on Trader Talk. That's what we do. We have old jokes.
100%. 100%.
We are just loaded up with them, Ben. Okay, so Ben, I'm going to give you an opportunity here. We've got stocks in the news that I want to get to. I'd like to look at individual charts, of course, but I also wanted to offer you the opportunity to maybe give us something from the broad market side of things that you might like to tie up the conversation on things today here, whether that be commodities or any of these individual sectors that might be moving. Any last thing you want to leave our viewers with?
Yeah, absolutely. So first of all, I'm going to address Adventure Golfer's question, which is the colors on that heat map, just before we leave that subject entirely. The brighter the color, the bigger percentage move. So brighter green, bigger percentage move up. Brighter red, bigger percentage move down, explains the colors.
Absolutely.
So here's the thing. Somebody asked at the top of the chat this morning, we've got geopolitical risk. Is that one of the reasons why things have been sitting, right? And so you got to think about what that geopolitical risk implies at this particular point. That geopolitical risk comes from not only the potential for supply constraints in the energy sector, number one, but number two, actual real possible warfare, right? So when you think about actual real possible warfare or depletion of war material, meaning missiles, bullets, and other stuff, right? Then you, I think, have to turn to the aerospace contractors. LMT, Lockheed Martin, not doing so well, but take a look at RTX, Raytheon Technology.
Sure.
And that's the one that stuck out to me this morning, just again, thinking about quietly making noise. The move that this has been making to the upside, that almost straight diagonal 200 period moving average, your blue line that you've got there, and then the acceleration of the 20 to the upside suggests that there is some rotation into RTX in anticipation of geopolitical instability.
That makes a lot of sense, Ben. That stands out. The Lockheed chart really stood out because it isn't moving like you said, but the pattern seems to be offering you a little bit of a different view, meaning we've had a slow moving ship. This looks more like a cruise ship turning around, 180 degrees. It's taking a little time, doesn't it?
Yeah, and in fact, I mean, I think part of that is there's some challenges, a little bit of overhang from a contractual side. I know they saw some contracts moving back and forth. Same thing with Boeing. The one that's kind of emerging kind of as that clean possibility, and that's simply perspective and thought around some of those other issues, is Raytheon kind of coming out of the gate here in that space.
Mm-hmm.
So the other might be, and I didn't look, but let me take a look here real quickly, is Textron. Take a look at TXT, again, in terms of a contracting standpoint, those types of things. And so in terms of these defense, aerospace, defense technology contractors, that's kind of the big four: Textron, Raytheon, Lockheed, and Boeing.
Okay. I do want to mention then, this is a Wednesday class where we lean into indices and equities. Yep. But Friday, I will be back with James Boyd for the Friday Trader Talk with ETFs. So just throw this out there. That's a live only class, everybody. And if you're wondering about some of this discussion and how it might offer opportunities in the ETF space, that's what we will cover on Friday. So if you'd like to join us for that one, it is our live session only, non-archived. Got to be here at Market Open Friday morning. So just a heads up, put that one on your calendar, everybody. Okay, Ben, let's talk about some of those stocks in the news. We talked about Intel off the jump today. We saw that ADI was moving a little bit. Let's talk about perhaps why. So ADI is certainly looking like a bit of an uptrend, working off the lows from April, like many of our stocks in a number of areas, Ben. This one's up about almost 45% in 51 bars, so a mere 10 weeks and 45%. They were upgraded by Cantor Fitzgerald to an overweight rating. Previous rating was neutral. New price target been bumped up from 250 to 270, stating that Analog Devices is a best-in-class analog company with outsized industrial exposure, which is preferential into the upcycle, according to the Cantor Fitzgerald analyst, Ben. So the bullish trend in the short term certainly leading to, I'm sure, to this upgrade to a certain extent, but the chart itself kind of resembles everything we've talked about from the tech space, doesn't it? Maintaining and holding the 20-day, continually showing brief retreats to support, being opportunistic for bulls wanting to step in.
For sure. And I think, you see this as maybe a series of bull flags. You get that rally up. You got that, again, like a lot of things did, that May 12th pop to the upside, a little bit of a pullback back down into that bottom of the gap as a support, rallies back up. So I know Barb Armstrong, who's in our chat right now, teaches that trading price patterns webcast on a regular basis. I used to teach it as the trading flag patterns webcast. Mm-hmm. And so, these types of patterns kind of emerge over time. And I think you're absolutely right. I mean, you see that leadership coming back. You see the RSI moving higher, the RSI still holding that diagonal uptrend line with that possibility of a flat bull flag type of bounce here. You can also look at it as a kind of a symmetrical squeeze, a symmetrical triangle squeeze that's starting to break out today. Pat Mullally and I used to talk about this as, we'd refer to this as a cobra pattern, right? The little symmetrical kind of one or two candle wide obtuse triangle at the top of an uptrend that then breaks oftentimes in the direction of the prevailing trend, but not always. This seems to be a cobra breaking to the upside.
You know what, Ben? The other thing that stands out on this chart to me is the reminder that a broken bull flag bearish break doesn't necessarily mean a reversal. This was set up as a beautiful bull flag until all of a sudden it wasn't. What it needed was the retreat to the 20-day, which it got. And then once it did, it was right back on path. And we got another bull flag in the midst right now. So the reason I bring it up, Ben, is that it's easy as a trader, easy in hindsight, that is, to look back and go, this bull flag is clearly not a bull flag anymore. We got to move on. Got to call that a done trade. And that wasn't the case, Ben, with only 1 day of testing the 20-day, and then that's now the short-term low. It can be really easy to be lulled into sleep if we're not kind of disciplined in our process.
Yeah, it absolutely can be. So that's why you've always got to be ingrained in your mind. If this, then that. If this line breaks, then what am I going to do? If this level of support breaks, then what am I going to do? As a trader, that thought process, kind of always having that situational awareness, number one. And then number two, having a situational plan based on that situational awareness, identifying those levels at which you can make decisions becomes a helpful process instead of saying, well, I don't know what's going on, so I don't know what to do. Even if you don't know what the reasons are, because very infrequently do we know all of the reasons driving price movement. I mean, news happens, right? And we don't know why. Yep. But if I have a mindset structured around, okay, I can see a level of resistance here. If that breaks, what am I going to do? If this level of support that I identify breaks, what am I going to do?
You know, I know that you say it all the time because I've been in these events with you, but the if-then concept is something that I bring to these discussions all the time as well, because as you stated, having that understanding of what can happen should lead us to being able to make faster decisions in the moment, leave you less likely to be paralyzed when things occur. And further, Ben, I've also added one little piece of additional context to the idea of the if-then statement. I'm a believer that you set your level and then you say, I think the market can fall to here, and then say, all right, what if I'm wrong and it falls another 5% below my spot, or 10% below it? Give yourself moves that you think are completely off the table, because invariably, Ben, those moves sometimes play out, and you need to know what you want to do when those aggressive moves happen, don't you?
For sure, because news can happen, and it can happen without warning, right?
Yeah. Okay, we had a couple of downgrades, Ben, I'm going to bring in. We talked about the ugliness in the solar stocks. It's been kind of a battle. Sunrun here was cut to, or downgraded, I should say, to a sector perform from outperform. Their price target has been aggressively adjusted from 12 down to 5. This is by RBC Capital. This whole reconciliation bill is a bit of a problem for this entire space, unfortunately. Yes, they might be sitting on support, but not a great look at a whole collective group in here, unfortunately.
True. However, I'm just going to say this from a personal level. If something comes out of that then reduces the number of summer sales people wandering through my neighborhood trying to sell me solar panels, I'm okay with that.
Can understand that as well, Ben. They are in the neighborhoods, aren't they? My goodness. In these areas where we get a lot of sunshine in particular.
Yes, for sure.
They're more than happy to try and talk to you about your solar opportunities. So I wanted to make sure we brought that one up. And then another one that was downgraded today, and I think I saw that they were downgraded a couple of times here in the last few days. And that is SRPT Sarepta, downgraded to hold from buy. New target here was down from 62 to 24. Not a great look at things, of course. Patients, they have a drug in the FDA approval process for non-ambulatory patients. And it's continued to lose support, Ben, and it doesn't look great as a reminder of what a downtrend can do to you, sir, right? I mean, downtrend is a downtrend until it's not. Try not to be a bottom feeder, especially if you're trend trading, right? That's a real difficult thing to do.
Yeah, absolutely. And again, here we are at that $20 level where that short pressure may ease, but at the same time, there could be sellers pushing this to the downside. There could be sellers that bought in with that expectation that say, this is my capitulation point, I'm going to sell. And then there's a bottom and it turns higher. But I think that's where you get those gaps too, right? So you get gaps on news, you get gaps on the downgrades. And this is what happens to or can potentially happen to, not necessarily unique to the pharmaceutical space, but when you have some of those regulatory issues that govern your revenue stream, that's a possibility, right?
It is. And I think I've already stated the understanding of what a downtrend is, and the reminder that downtrends can run a lot longer than you expect, just like an uptrend can run a lot longer than we expect. we know it can go both ways. And my hope today, Ben, is that our viewers are taking a couple of these nuggets and maybe just reminding themselves in the future, right? Maybe a little sticky note about downtrends can persist, or maybe, hey, in consolidation windows, RSI can be a little instructive if we see improvement there. We've had some wonderful discussions today, Ben, some good back and forth. I love having you on, man. Thanks for stepping in this morning.
Thank you.
For our friend Brent, and sharing your thoughts, sharing your ideas.
Absolutely. My pleasure. And thanks for having me on. It's always fun. I'm going to be coming up in just a little while talking about index options. So you got me warmed up for that. So
Great.
That's good.
Well, make sure that that's on your calendar, everybody. An opportunity to watch Ben again later today is always a good one. I'll be on as well, stepping in for our friend Cameron May, doing getting started with Think or Swim. So we'll have some new tool details there for you all. But for now, we'll wrap it. Thanks for being here. Thanks to Barb Armstrong. Follow us on X. And if you liked the discussion today, everybody, hit that thumbs up button for us down below. We'll get this one out to the archive a little later today, and that'll help us on the replay. So we'd appreciate it. Hope you all have a wonderful rest of your Wednesday. We look forward to seeing you all again real soon.